Your market news now. Asian markets were higher, led by advances in Japan, where we saw the Nikkei reach over 38,000 points. Meanwhile, U.S. equity markets are looking lower right now, ahead of U.S. CPI data for January, which is due at 3:30 South African time. Looking at oil markets, steady ahead of the OPEC outlook, which we are expecting. Elsewhere, just a reminder that Chinese markets are closed for the Lunar New Year and will resume trade on February 19th, which is this coming Monday. To give us more perspective on the dynamics in the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. I mentioned in my intro that we are looking ahead to US CPI data, which is out at 3:30 South African time. With that in mind, how are the markets performing?
You know, as it is now, the markets are steady, and as I say, all of us, are waiting to see what's going to be happening with that number. Reason being, we know that the US Fed, they're looking for convincing data to say that at least they've managed to fight this inflation, and they made it very clear that they're just not going to be convinced by one number. And bearing in mind that last week or so, we had two officials coming from the European Central Bank as well, saying that they still have a long way to go to fight inflation. So it's very important for market participants whether this will also confirm that we're on the right direction, not forgetting as well that they have the retail sales numbers which are coming out on Thursday. So probably if they also show that they are soft, then probably that will continue to reinforce our expectations that the rates will be going down sooner than we thought.
Over the past couple of days, I've been having conversations with analysts trying to understand from their perspective, what do they believe happens once we get those rate cuts? Like, what does history show us? What does the data say? And one analyst said that at some point we'll go back to fundamentals when it comes to looking at equity markets. How are you seeing it?
I think that's very critical to go back to fundamentals, but I think before that, we have to be careful that we don't do or see what we've seen in 1998, that immediately you start cutting rates, then thereafter inflation starts picking up, and unfortunately we have to start increasing them again. So it's very important that they are very convinced that they've managed to fight inflation. And yes, after all that, then we'll look into the real things, and here are the fundamentals of the companies, and we know that the fundamentals of the companies will be informed by what is happening with the economies themselves. But as it is this year, it's not going to be an easy one. We expect volatility, given that we've got so many elections happening around the world. So I don't think it's going to be an easy ride. But it's true, we just need to make sure that we start trading the central banks, because that's what we've been doing so far, trading central banks.
Given the heavy weighting that the tech stocks have on the S&P 500, if you had to take the tech stocks out of the picture for a second, are there other sectors that are attractive to you if you were to look at the US market to invest in?
Yes, we know that the tech sector have managed to have the guys reach record highs, but generally the U.S. economy looks more resilient compared to other economies, and hence maybe we see the likes of the U.S. dollar continue to be in demand and compared to other currencies. So yes, it's not going to be shooting out the lights, but the U.S. economy as it stands now seems to be doing much better than other economies, including ours as well. And yes, other than that, you'll also start looking into consumer goods, as we've seen that, as we said, that the retail sales in the U.S. is something that we need to watch. And we know that the U.S. economy, just like most developed economies, are more than 60% driven by consumer demand.
Speaking of economies, I want to talk about China. What would you want to see happening in the Chinese economy or coming in from the regulators or the leaders in order for you to be optimistic about China's economy?
I think for them, they just have to do what they know best and what we expect out of them. They must stop playing around with the smaller stimulus here and there. They definitely need to come with a serious bazooka to make sure that they help that economy. The guys have been struggling since COVID. Remember, these are the last guys in the world, who managed to relax their COVID restrictions. I mean, other economies did earlier than them, and hence probably that doing better than them. But China itself, they definitely have to realize that they've been lagging behind, and the world economies are also relying on them because they happen to be one of the major consumers of so many things. With us, we are looking more into commodities. They consume most of our commodities.
Between February and March, we're going to get a lot of the local companies releasing their earnings, the likes of Anglo American Platinum, Kumba Iron Ore, etc. If you take the that 2 months of company earnings, what are you anticipating? I mean, we've got the trading updates, we've got guidance, but what are you anticipating from these companies?
And you are right, most of the guidance were just okay, and we've seen with the retailers, they didn't do that great, but also other heavyweights, your likes of Anglo-American, if you look into their production reports, stuff like that, you can see that the guys continue to struggle, let alone that load shedding continues to be a big issue, and those who manage to work around it, unfortunately, they increased their cost of running their companies because of the expenses related to diesel. So we don't expect anything that will shoot out the lights, and most of them, by the way, they happen to be supplied the world. So the world as it is now is not doing that great. So yes, we just at least expect them to just do okay, and not forgetting that our expectations, the bar has just been set low. So we must not be surprised when we start seeing the guys managing to beat our expectations.
As we wrap up, US CPI, we are a data-dependent economy or participants. How important is the figure?
Very important, and people think that maybe it will drop below 3, at least to 2.9%, and that at least will give an indication that at least we are on the right track when it comes to fighting inflation. Hence, I think that's the most important economic data that we'll be getting this week globally.
All right, Makwe, let's leave it there. Thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers. And as he mentioned, we are expecting headline CPI on a year-on-year basis to come in at 2.9%. So the Fed's appetite for rate cuts will be tested this afternoon at 3:30. If it does come in and meets expectations, this could be the lowest figure that we see since March 2021. We're going to take a quick break, and when we come back, we'll have more news for you. So stay tuned.